It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
EPAM, it trades at a price of about $220 right now. And what the company does is they're what we would refer to as a digitalization company. They provide software engineering services to their clients, which are enterprises and large organizations. And they essentially help their clients implement advanced technologies like AI and automation. Really what they're doing is they're helping their clients adapt to a digitalized world, helping them become more efficient and more competitive. So as I said, EPAM is a company that is very much involved in what's happening in Ukraine right now. The reason for that is that Ukraine is in fact home to a large percentage of the company's employees. So about 50% of EPAM's productive capacity was coming out of Ukraine. Initially, we picked up coverage on this company back in November of 2018. We recommended it at about $123. It was a fantastic story, providing critical services in a high growth market and producing substantial cash flow. We did put a hold rating on the stock back in May of 2020, and this is partly due to uncertainties caused by the pandemic. And even management of EPAM, they had taken their guidance off the table. They saw a lot of uncertainties with respect to their own growth outlook. And this was a situation where we continued to love the business, but the valuation had hit frothy levels at its peak, about 80, 90 times earnings. So even though revenues were growing at 50%, we thought that was unsustainable even for a company like EPAM. And we put out a note at the end of 2020 instructing holders of the stock that we still like the company long term, but if you had made a strong return, doubled, tripled your money, then you should probably take some of the profits off the table, just even to rebalance the stock back in your portfolio. As of about 2 weeks ago, the stock was down 35% from its high, and the valuation started to look a lot more attractive. Shortly afterwards, EPAM came up with their Q4 results. The numbers looked very good. The guidance for the current year continued to be strong, about 35% growth in revenue, 25% growth in earnings per share. And of course, the topic of the company's exposure to the Ukraine and a potential war situation there came up in the conference call. Right now, I do think it is a very interesting company. I would wait until the next quarter to get an update from management. There's really a lot of uncertainties. In terms of the services that the company provides, absolutely critical. And I'm sure that they are offering some of these services as well to the government of Ukraine to help them. But right now, in terms of an investment, we would just continue to hold. Really a lot of uncertainty. We want to see what's going on. We wouldn't necessarily be buyers of the stock, but I'm 100% confident that the company will eventually get as many of its people to safety as possible. And over time, over the next several years, we'll rebuild any lost parts of its business. So, our hearts go out to all the people in the Ukraine, and we just really hope that the situation improves from here.